Good morning, traders. Welcome to the Traders Lab. I am your host, Tom B. Thanks for visiting the lab today. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades, and these are available to everyone at no cost. One moment. Okay. They're available to everyone at no cost in the Bookmap Discord Trader Lab community. Trader Lab's a group of like-minded traders who come together to leverage their collective experience. It doesn't matter how long you've been trading or how you approach it. What does matter is if you've been working hard and pretty much coming always back to the same place. If you're leaking equity in spite of it all, it may have nothing to do with your effort. It may have to do with your process. And that, unfortunately, is something that we may keep doing because of the random trades, winning trades we all have. But if we can't have actually an edge that favors us, we're still going to pay the other participants. So the idea of TraderLab is to help you differentiate between gambling or a video game or sitting on the other side of the table and only interacting with the other participants when you have a statistical edge that favors you. This is really about the business of trading, and I hope you find this stream useful in your development and your journey. And thanks again for visiting Trader Lab. Now, I want to remind everybody I'm streaming from Costa Rica. I've had some substantial technical issues here, hardware-wise, otherwise, and maybe it was just a full moon. So if I drop out, I'll do my best to get back. Also, the internet is not stable here as well as the power. Pretty exciting. It's kind of like if you like to take risks, come to Costa Rica, especially in a remote location. Basically, I'm sitting at the edge of the jungle. So if I drop, and if you're in YouTube, we will recycle. The router will reset. Takes a minute or two, but it will continue. Hopefully. Again, thank you for your patience, and thanks for visiting Trader Lab today. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, by the way, I should be able to see your questions in YouTube, hopefully. And again, if you are in YouTube and I drop out, it will pick back up again. So just be patient. And thanks again for visiting the lab. Now, there's something you guys need to know about. And before we get into it today, there's a substantial sale going on at Bookmap. And this is, how we all wait for Black Friday. But these are sensational opportunities. And if you ever wanted to try Bookmap, there are substantial opportunities for you guys to kind of get your toe in the water and save some dough, which I always think is good, right? So this is going through the end of the month, 50% off Global Plus quarterly, 50% off data good for 3 months. If you want monthly, you can get 60% off, and all this goes through December 31st, and also 50% off add-ons. And this doesn't matter, whether you want one or you want a whole suite. It's all available to all you guys. So don't forget about this. It's easy to get swept up, as they say, in other things, but if you've been thinking about trying Bookmap, this is the best I've ever seen. And not only that, when I started with Bookmap, which I think was around 2015, it was get your checkbook out, So that's what I did because I wanted an order flow tool that was visual, where I didn't have to be watching numbers change on a dome, so I could concentrate on other elements. So if you're a visual person and you want to cut through all the noise and just see what you need to see, Bookmap and all the other tools that are available with it, which of course you have to go through a learning curve like anything else for a high tier product. But for me, at least, it made a lot of difference for extracting an edge. And the name of this business is Edge, right? So let's get on with it again. And thanks for visiting Trader Lab. Now, I'm going to just touch on something very quickly. This is the process I share in Trader Lab. It's not complicated. What you need to understand about trading is it is not complicated. It is random. That's where we get into complexity in the way we relate to the market. The market really is just random. So rotations are random, and what we are trying to do is get an alignment in a random environment. That's what creates problems for us because we want precision, we want predictability, we want to avoid risk, we want certainty, all the wonderful things, of course. And we're also wired to avoid uncertainty, and it's a primal thing. So all the things we need to do to be able to sustain ourselves in the trading business, we're pushing back against primal wiring being avoid risk. And that risk goes back to the saber-toothed tiger. So it's not just something that showed up. It's part of our DNA, and it's why we've survived as a species. Well, those triggering behaviors, which release hormones and chemicals into our brain, fear, fight and flight, then FOMO, all those things are all chemically induced. So while you're enjoying this being swamped by chemicals, somehow you're supposed to stay rational and intentional. Well, it's a lot more difficult than you might imagine it. And that's why we gravitate to indicators, black, white, red light, green light. Works great when you're driving a car, assuming you respect the red light, green light. Doesn't work here. So if you keep waking up in the same place in spite of your efforts, unfortunately, you're probably going to get the same results. So we really need to approach this differently, understanding the things that the reason most retail traders can't sustain themselves in the business. How do we do that? We need to understand the business. The business is shopping. You're a good shopper. You know the basis of trading. The basis of trading is what's too high, what's too low, what's fair. And the auction is a representation of this shopping experience. The volume profile is a chassis of seeing volume and interpreting what volume means. Prices are not equal. This is really important to understand. It is not the same thing. Then what is the time frame you trade? In TraderLab, we have traders who are swing traders. We have option traders. We have doesn't matter. What matters is statistical probabilities and a rotation or a time frame that pays you for your risk. If you're a scalper, you're pretty much in an environment where you need precision. Well, we don't have precision. We always have maybe. So maybe a way to get over that need to be right is really not the business. Maybe the business is the need to get rewarded for the risk. And that requires range and different time frames. So we might execute in a short time frame, but we might want to ride a larger rotation. Might make sense, right? And then what is the context in that time frame? What's context? Is the market going up? Is the market going down? Are the sellers under the market, the sell stops, or the buyers above the market, the buy stops? Who are the buyers? Who are the sellers? Where might they interact? Why? All those are questions, and we don't have answers. We have maybe. The best you have is maybe. Well, maybe if you use Bookmap, you'll also be able to see this more minute behavior of transitions and change. Maybe we can use tools to help us get closer. So when we come to these other locations that might have a statistical edge, then we can kind of narrow it down. This is a trading process, and you might find it interesting to see how this works in the TraderLab. And again, there's no cost for TraderLab. It is a community of traders, and it's available to all of you. Now, there's something I want to show you guys. I think, maybe not this one. Hold on. This is the volume profile. And what I really want to show you, and I pointed this out in TraderLab. Now, by the way, if I point something out, it doesn't matter. What matters is understanding what creates behavior. This is not about indicators. This is about understanding actually how the market works. And most of us use our indicators because, heck, we got this toolbox. Look at all the good stuff it has in there. Have you ever ask yourself, why are there 100 or 150 indicators in a software toolbox? Ask yourself why. Well, how about this? They all work randomly. But when you try putting them together to create, they squeeze the randomness out and create certainty. All you're doing is putting random multiple inputs into a random environment. How can that give you certainty? It only really is going to give you more randomness. Casinos, if you will, play their games with anchored inputs. I did a primer webinar on this. It's in the Trader Lab, in the Trader Lab library. Don't forget, it's open to all of you. About 34,000 views, and it talks about anchored inputs. That means no variables. What is the variable? The market is. Now let's look at what this says. Remember, this is the language of the market. Now, this is Friday. Friday, and this is going to be just a little hard to see because it's kind of scrunched up here. But this is Friday's high. This is the first hour's high. And so this turns out to be the high of the day. And I have to show you some other things about that too. But I want to show you this. This is an auction. Now, it would be thicker if I didn't have this here, but I can't spread it out at the moment. So this is like too low, too high. And then if we fall away from it, we have rejected this, and now we're doing this. So it kind of rotates around. And this is the retail price from Friday, and that's settlement. So basically, we closed down here. Well, what about this? 94. Why is that important? Because we left this auction and we fell away from it. It is a language. It is saying maybe. I'm always going to say maybe. Maybe this is too high. Now, I got to show you something else. I'm going to take you into higher time frame, then I'm going to come back to this. Now, this is today, so we don't really need to see that yet. Hold on. I'm going to try to make this larger. I'm on a laptop, by the way, so this is like, let's just see. Okay. Moment here. Let's try this again. Those of you who are following the stream on Friday, we had a target which is stops here and potentially up here. So it was longs on Friday, and this was a key support. Yeah, this is a key support area from Friday, and the stops or fuel were here. So this was a target, and then this is a target. And we didn't quite get there, okay? That's life in the fast lane. And now you see how we came all the way back. This might have been excess. Now, what we didn't know about Friday, or at least nobody knows, is just long liquidation, and then we continue today, or what? So the thing is, when we got above here, what's here? Buy stops. If I don't get buying above here, and all we're doing is squeezing, and here's the other piece. What has the market been doing? Up, 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 up. So where are the sell stops? The market is loaded with buyers. And at some point, and of course nobody knows, right? We're going to get these sellers. And we're going to get them because they have not been properly abused. Now, when I'm saying abused is the market goes up to go down in all time frames. Well, when you have something like this, the buyers, other than some counter rotations, have not had any problems. They're having a great time. And it is FOMC, right? So if we know this, we got the shorts out here. Remember, market goes up to go down. And we have longs in here. If we get the shorts and we don't continue, then what? We're going to get the longs. Now, let's come back again. Where did we reject? So we got the stops. We got this failure. We got under this level, 94. Now, let me go just a little further, and you're going to see how it all fits together. Now, this is part of auction market theory. Remember, the shopping experience. Hold on. I'm moving stuff around here on my laptop. I have to tell you, it's a thrill. Remember, if I drop out, if you're in YouTube, I will come back. If the power goes out, the router will drop and it has to recycle. You guys know about that stuff. So it could be a couple of minutes. This is that low volume zone. It is the ETH high. So what does that say? Let's look at the language. I'm not paying that. Leave. Now, the next piece is the highest volume in the ETH was here. Overnight volume point of control. Friday's value area high, where 70% of the volume was here. And then we have value area low below us. We have yesterday's low. What's under there? Stops. Naked volume point of control, which is a previous retail price, and we have targets below. Who knows? Now let's take a look. So for me, this suggests down today. And that doesn't mean you can't take longs. It just means you need to know what has the market done. Now let's get over here towards the open. Here's another test of the ETH high. Notice where this is, okay? So this level's, and I posted all this morning pre-RTH. Now, I also have to say to you, nobody knows what's going to happen. All we know is what might happen. And if we know what might happen, it might give us an edge over other traders who think they need to predict what will happen. There is no prediction in this business. Remember, it's a business of randomness. So 8 a.m. Central Time. I'm in Costa Rica, so 8:30 is RTH open for me. Let's get now to the RTH and take a look. So what do we see at RTH open? Well, this is already suggesting a short. Now, the problem for us is if you're waiting, then you have to have a structured trade. By the way, guys, how are we doing in YouTube in the Trader Lab? Hope you guys are doing okay. So what are we doing here? Now let's go to our context grid sheet. Remember what we know. Too high, maybe. Remember, maybe. This is the retail price from the ETH. So what do we do? We're opening in range in value. There's the RTH open. This is value area high, value area low. So what does that mean? The market is in balance. What is possible? Well, it could be a two-sided trade, a low conviction day. But, here's the but. What do we know? This is just a sheet that generalizes. What do we know? The market is long. What else do we know that's not on this sheet? ETH high tested a key location. This is where mechanical behavior does not work. This is where you have to understand how the market works. And you can learn that in the Trader Lab. So, we know this is too high, maybe. And by the way, it doesn't have to be too high, but that's what it's telling us based on Friday. This is our retail price. Highest volume in the ETH is here. So retail, think high volume in your store. Retail, if I have too high up here and I have a retail price here, this is where I need to see behavior. So I can come back here. I can go wherever. But now let's go a little further. If I open here, I'm in value, I'm looking at two possibilities. I can stay in here, or because the market's long, I can fall out. So let's take a look at how this works. So this is the highest volume from Friday's RTH. Think of these like retail prices in your store. So if this is the last auction ETH, then this might be too high. I'm not paying that. Then we have ETH mid. We have yesterday's retail price. So often what happens is if this retail price from last auction is too high, we're going to check this one. If we get below this one, we can come down and test the value area low and the ETH low. We already rejected, it appears, the ETH high. So statistically speaking, and there's more to this, so we're opening higher, because settlement's down here, inside of yesterday's value, so higher in range. There is over a 98% probability we take out the first hour's high or low. A 98% probability we take out the ETH high or low. An 82% probability to take out the previous high or low. An 81% probability to get to the overnight volume point of control. And if we get to the value area low, it's about a 55%. ETH low, 54%. It's going down. Previous low, 34%. Now, statistically, it's going down. Is that a conflict? No, it's not, because statistics are in a vacuum. The condition of the market is the market's long, which means there's sellers under us. Does that make sense? How are we doing in YouTube? Please hit a like. Also, if you have questions, post them. I'll do my best. Remember, I'm in Costa Rica. I'm at the edge of the jungle. And the monkeys, which I ought to take a video up for you guys, they walk on the cable for the internet. And it's kind of a sight. However, not so good for the internet. Or just the wind blows the wrong way. So, RTH open, let's come to this now. Let's look at the first opportunities here. Remember, ETH volume point of control, value area. Opening here in value. So let's watch and see what it does. So I'm going to show you structured trades, and you have to vet everything. These are available in TraderLab. Now, I always have to say, if trading was mechanical, we'd all be mechanical, and we'd have a red light, green light, and every retail trader would have an ATM in the basement. It just doesn't work that way. We can't create red light, green light, or at least I never was able to. And I tried. I built trading systems. I did a lot of things over the years. I'm doing this 47 years now, or going on 47 early this coming year. So I've done a lot. And most of that, everything had winning trades. So that's not the issue. The issue is consistency and statistical edge, not winning trades. And we all think this is about winning trades. Winning trades are not the issue. Everybody has those. It's an edge that you have more winning trades and more range to make up for the stops we all take. So let's look. RTH open. Now there's another concept here, and it's called inventory rebalancing. So we know 94 is the resistance and the ETH high. So what we know is there's going to be shorts in here, possibly, who got short in the ETH, and they're getting this, okay? So they open and they're getting. Now, what might you do if you were short? Well, if you took this down, this is support right here. This is the retail price from Friday. If I open right here and I hit this, then here's the possibilities. I can bounce off this and go up, and this is my outside edge, and so is this. Or if I come up, then if all this is short covering, which I don't know, then I can look to be a seller. Now let's see if we get where this might happen. And here's another piece for you. You don't need to do anything. But you need, here's the thing about trading. We're not here for a video game. We're here to wait for the trades that favor us. You don't need to be taking a lot of trades. That's FOMO, that's dopamine, and video game playing. The thing about trading is some trades have more probability under certain conditions than others, though mechanically they look the same. You need to understand who's stuck. And if you can think of it this way, who's on the other side of your trade? Well, if we think the market's been going up, is it logical to you that maybe if the market comes down, all these longs that are sitting in here and all the sell stops under the market might get activated? Does that make sense? How we do it in YouTube? By the way, if you have any questions, please post them. I don't see any questions in YouTube. Okay. Okay, so let's take a look. So we have our open. We have a high volume area here. Could be a micro composite high volume node. Doesn't matter. It's high volume. And that comes in around, I think, was 83-ish. It's over here, actually. So let's see what it does. Market's going up, having a wonderful time. Are these longs or shorts? Covering. So let's look. This is called developing volume point of control. And since we're opening in balance in range, we anticipate two-sided trade. You would know that if you're in TraderLab. So if you anticipate two-sided trade, so you have your RTH open here, isn't this two-sided now? You see? So if it's two-sided, you would have in your trade plan, if you're in TraderLab, and of course, if it's part of your plan, that you don't take any trades right here because you're looking for what's called an open auction. An open auction, if we come down here and this is too low, we're going to come off it. And if we come off, value areas here and ETH retail price. So you have retail from RTH Friday and you have ETH retail from this morning. So these are kind of your outside edges. Think of like a bookcase, and you got the outside edge of your bookcase. So right here, now this is microstructure. Buyers are here, sellers are here, buyers are here. No clue, by the way. As far as I know, it's going wherever it goes. I see a breakdown here. I see a breakdown here. I see a breakdown here. The yellow line is developing volume point of control. Remember the shopping experience. So this in a developing time frame is a retail price. Now, since the market's only been open, 39, 40 seconds, this is very sensitive because the volume, it's like they open the store door and everybody comes rushing in for the holiday shopping experience, right? They all rush in. Now the volume starts, and now this thing starts measuring the volume. And as it measures the volume, it's telling us the retail price at this time. It's going to move all over the place depending on the volume. Does that make sense? So let's see what happens here. So what do I know? I know there's sellers up here. There's the icebergs. I know that we had buyers here and the sellers took control. It's still two-sided trade. I have VPOC migration. There's more volume here than there is there and there. So what's happening? Good question. You know? No. So let's watch. So just sitting here. Support is here. Support is there. So let me mark these. I call these variable high volume nodes. What I do, and this is not complicated, it's just how do you slice and dice the market up? I don't use indicators as you know, in the traditional sense. I use volume because not all prices are equal. If I have high volume at a location, think shopping in your supermarket. Retail price is high volume, right? Buyers and sellers agree to do business. But what happens if the price changes? And you can't buy an S&P at the moment here because now the buyers and sellers are doing business at a higher price. Then if there's any left on the shelf, it's going to be here. That's becomes support. This is support. So you got support. Now by support, this is like tissue paper. It's just an ongoing distribution of volume. So by using this process, I can get and Bookmap, I'm really threading the needle. What happened here is an example. This is order flow. This is delta. It shows me aggressors. Well, why didn't it go down, Tom? Well, because this is the retail price, and if it's too low, I'm going to have absorption by the passive side. You see them right here in the heat map, and then I can move higher. What happened up here, Tom? Green bubble. Why did it go down? You see the passive side, the icebergs, they were absorbed. So right here I have sellers, I got buyers. You see? Sellers, buyers. Now who's going to do what? Great question. No clue. Buyers were here, which is why it rotated. Buyers are here. Remember, the sellers are there. How do I know there's sellers there? Because the buyers were there. The buyers are there, and those are sellers. They're absorbed. I break below the buyers. There's the red bubbles. Those are the sellers. The buyers were there, and these buyers don't get back above here. So the sellers took control here. resistance now is right there. Right there. Let's see what happens. So the delta was here. The sellers were here. The buyers, support is there. The buyers took a shot here. What happened? The sellers that were here sold again over here. And again, the buyers are here. The buyers are here. The buyers, sorry, Charlie the Tuna, break low. Last time where the buyers is here. Retail price, break low, resistance, support, break low. Where's the short? Here, here, and here is resistance. There's your resistance. These are all Trader Lab shorts. So let's come back right here. So up here we know too high, break low, too high. Let me mark it. Now, so you guys know, these are not necessarily trades unless you understand them and vet them. And we all take stops. We all get out of alignment. So we can't get hung up on, I don't want to lose. We have to be more hung up on, I want edge. I'm going to do what it takes to understand where I have an edge. And I also understand there's overhead and costs of production. Every business has it. Casinos seem to do pretty well paying the gamblers. You have to pay to play, as they say. Hope that makes sense. When I take an entry, Ben, it can be limit or market order. Doesn't matter. That's a preference. I tend to use limit orders. I don't chase the market. I trade structure because I have a confidence on how the market works. And if I don't get picked up on my trade, I'm not going to chase it. But I think that's, again, just a personal preference. So short, break low. What was this? Let's come back to the store. This is a retail price. This is too high right here. What's this? This is too high. This is a short. If this now is too high and I break below it, it is resistance. If I break here, now remember, this is a target. This. So getting short, where anywhere here, you're going for this for a scale or subject to your plan. If I come back here and they don't take me out, and I always assume I'm going to get taken out because it's random, why wouldn't I? And this shifts down. If this now is too high, remember shopping, and I have a sweep. Now right here, when I see this sweep, and this is how Bookmap order flow tools can give you some insight, and nothing is predictive, everything is maybe. If I know this was a retail price from Friday and I got settlement, all which are valid, and don't forget, we have an excess high in the ETH at a resistance level at 94. Structurally and statistically, what does that do for me? It suggests ETH low. And again, it's only maybe. So I already know statistically ETH low, value area low. And if I get under here, then I got yesterday's low. So it's all shorts for me. No longs unless you're a counter trend trader. I'm not saying you can't trade, it's whatever you want to do. Now, this was really interesting. This is the next target, by the way. And what was that statistics? And remember, past performance, not indicative of future results. You got to vet these. 97% probability we take either the ETH high or low. Now, if you're in Trader Lab, if you know why 94 might be too high based on how the market works, and you had short and you were in shorts, might you be holding a runner here from shorts up here or wherever you put them on? So the targeting would be to here for scales, and then the here and value area low. Now look at this buying. I saw that and my jaw hit the floor. It's like, what's that? Now let me show you something else. Try to find this. And what else do we know? If I get outside of value area low, it suggests lower. And where is that? Yesterday's low. This is another target. So it's only been shorts, unless you're a counter trend trader. And if you're following a plan, you just be taking continuation shorts, again, unless you're counter trend. Now, we have another structured trade here. This is the retail price. You'll see it's too high. I'm not paying that. What was this? Too high. What about this? Too high. Break low. Now we have a couple things going on here, and this is pretty important. So far, we're going down. And what else do I know? Well, ETH low, you could be done with your trade here or wherever your plan tells you. It's not up to me. It's not, it's up to you. So you could be back in your Barca lounger. Or once we hit this and you get this, then you need to be looking, or what do we have? We have, I'm going to take you in a micro now. Just going to show you some ideas. All of this, it's about reading a language. That's really what this is about. So if this is too high in the developing daily time frame, as you think of it, then when we go down in time frame, when we have consolidations, what's really happening when you see a chop like this? Sellers are there, buyers are there, buyers are there. You have this sweep, which suggests counter rotation. Come up here too high. Then if this becomes too high, I can break and then come back and test it. There, 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 there. So, and there's another piece. Where am I? This was a fair price from Friday. If we get below it, it might be now too high. And there's another thing. VWAP to VPOC. This is a structured trade. It is aligned with the dominant side of the market. Now, how far is it going to go? Unfortunately, no way to know. So this is part of the glamour of trading, is operating in a random environment. You can't say it's going to do this. When you start saying to yourself, it will do something, it's not a good process. What you need to be thinking always is what it might do, not what it will do. It's very important to keep your mind open to possibilities and probabilities, okay? Hope that makes sense. So we have the VWAP, the VPOC, potential short here in alignment with Friday's retail price. And then you're looking where the where the sellers were last. This is an outside edge. Now, this gets a bit more scalpy, shorter term. So you have to be really, you can see right here, you see, you have to get you're risk adverse. Now, so what you have is this. If it qualifies, you need to have I can't see here, actually. Hold on. Oh, didn't qualify. 78 cents. No, this trade doesn't qualify. I'm sorry. Didn't have the range. It has the behavior. It does not have the range. This is your resistance here. This price was too high. Up here, variable high volume node. Now, I don't know if you could get into this. So let's assume you can't. So what do we know? Retail price. This is balance. Come outside. It's too high. Break down again. And then you get a sweep. The sweep suggests back up. And then you'd be looking for possibly continuation shorts. This is more advanced. Look where we're coming back. You see, this is an important level. This is what makes this level important. So this, you notice we come into liquidity, we get a sweep. That suggests a counter rotation. We come back to the upside. Liquidity jumps in the book here, and we're at a location. If this is still too high, we can continue lower. VPOC migration. So what's the language say? Too high, developing, shift down, potentially, too high, break low, test. So here is a possible short if it's in your plan. I call these VPOC migration. The other part about this is what it's telling us is so far that we are rejecting what's above us, and we have to be thinking about where the fuel is. It's under yesterday's low, and this is the next target down if we get there. So let's see. These are structured. So you could just be taking these trades to locations. Now, get outside yesterday's low. Why would that be relevant? Because there is fuel under there, sell stops. And remember, at the top of the stream, sellers haven't been abused. And they should be abused because they've had a free ride. Market goes up to go down. Now, we're outside yesterday's range. We're under this level. This is still setting up continuation trade. So the other thing is, here's what also is important. Value area low. 70% of the volume from Friday took place up here. When you fall out of value and then come out of range, it sets up primarily shorts only. Longs in here are counter trend, and that's okay. If you're a counter trend trader, if you have an edge, you should do your thing. Developing traders, I always kind of suggest pick a side, try to align with what your definition of a dominant side is in your time frame, and wait for the continuation trades. Don't fade, because you may only be fading a little hiccup here. You might be buying this and get this, buy this, get that. That's counter trend. If you're not skilled at it, then don't do it, because then that's more dopamine and not intentional as far as edge and business plan. This is a business. You got to remember that. And the more you act like other retail traders, the less opportunity you're going to have for sustainability. So buyers are here, break low. This is now resistance. It's right there. Notice where it comes back. It tests. Volume is in here now, breaks low. Notice where it comes back. It tests the volume. It's right there. Here, break low. Where does it come back? Test the volume. What's it doing here? Testing the volume. It's all the same. Testing the volume, in fractals. We like to think of it, maybe. Now, IB low. This happens at 9:30 Central Time. The first hour is high or low. Let's go back to our statistics. There's a 98% probability we take out either the first hour high or low. So I don't know about you, but I'm going to roll the bones here and say it's going to be the one on the low side, considering we're out of range, out of value. Now, in our context sheet, if we break out of the prior day's value area, we need to trade in the direction of the breakout. What does it mean? If we're breaking out of the prior day's range, we're rejecting everything above us currently, and we need to trade in the direction. So all it is now is, unless you're counter trend, is shorts. That's it, shorts, based on context. So we have the IB continuation trade. The IB is set at 9:30 with the high probability of taking out first hour high low. And let's go take a look at this. This is a structured trade. Now, the idea of Trader Lab, guys, is to help you understand how the market works, why it does what it does, and using structured trades that you can anticipate, define, and then wait for the trade to come to you. You don't chase the trade. If you're chasing the trade, it's video game. Okay. I always say go to the casino, get the cocktails and the ticket to the buffet. You'll have a better time. Sellers here, outside of yesterday's range, outside of value, shorts only. So the IB trade sets up after 9:30. So 9:30 is here. This is the IB low. There it is. So if we break the IB, we have something called the IB continuation trade. Let me show it to you. It's right here. So what we have, let's look at this. let's look at this very carefully. So up here, we know this is too high. These are all shorts if it's in your plan. Not in your plan, don't worry about it. This is another trade. This is a structured trade. They're all structured, but they're micros. They're derivatives of the broader strokes. As you develop and build edge, you have to have a proof of concept. You have to know how to build an edge. You have to know if you even have an edge. If you're just looking at things that look like they might, because you've seen it many times, you still may lose with it. Everybody has winning trades with things that lose money. It's just a matter of, do you have more or less? So remember, gamblers win. You know, they have winning hands, but they lose over time. We have to approach it the same way. We want to win over time, not have winning hands and still lose. Think about it. So this is the IB continuation trade. So this is resistance here. So the buyers are here. The passive sellers are there. There's the icebergs. Sellers take control here. Resistance is now under here because the buyers were here. Sellers are in control here. So right here is potential resistance. The IB continuation trade is set up at 9:30 when this is locked in. So if I break below here or before, one of the ways I think about this is if I know the trend is down and I know I'm outside of range, outside of value, I only want to take shorts. If I suspect at the time, I'm not going for the first hour's high, I'm going for the first hour's low, I can take an anticipatory trade if it fits and it's vetted towards a statistic with over 98% probability. Does that make sense? So at that point, I have IB continuation trade or anticipatory shorts into the statistic. That's up to you. So let's look at the IBC. So I break here. So I'm under the IB. This triggers the IB continuation trade. I get a sweep here. This suggests a counter rotation. So the teeth chatter right here. Let's look at this. But I come up here. So I have resistance here. Buyers are here. They're getting absorbed. I break low. I'm under my IB. I have a sweep here. Suggests counter rotation. I have resistance here. I have location here. And I have a sweep. This sets up a trigger potential to continue lower. This is the IB continuation trade. It's a structured trade. You can learn that in TraderLab. Now, so if you took this trade here, you'd be risk neutral. And let's talk about where you might be going with this thing. 42 is a target, and this is a high volume area. And these are areas. They're not predictive. They are areas. This 42 is high volume. Remember, in the RTH, each individual auction or session has its high volume. So this was the high volume from Friday. This high volume, which was a target coming down today, is Thursday's retail price. So it was too low. We went up and we squeezed the buy stops out of here, which was a target. And then we had another target up here for buy stops. Didn't get there. What the market often does, it goes up to go down. So if there's shorts in the market, they're going to have stops here. We get them out. And then notice what we have, a potential excess. Now, because it was Friday, we didn't know. But the ETH high was very clear to me based on what I showed you earlier. Now, again, how it gets there, what it does, it's not our job. So then 42 is the volume in all of this. That's Friday's high, and there's a little gap down here. So potentially, and we have to be aware of this, now we have FOMC, we could come all the way down here or not. It's not a recommendation, it's just maybe, and that's all you got. 42, though, is the highest volume for all these days. It behaves the same way as this does or this does, but it's a intermediate time frame. And you could slice these up any way you want. To me, there's not a right or wrong to anything in trading. The right or wrong is based on statistical probabilities and how you define the market. Everybody can do it their way. It's not a right or wrong way. Whenever somebody tells you something, doesn't matter where you hear it from, you got to see if it fits your psychology and you can align with it. Otherwise, not so much. So 42 is a possibility, which is this, and it's an area. There's no precision to this. So we have the IB, and we have a couple of other pieces here. So we have this short going for the statistic. You can anticipate it or wait for it. This is a structured short. Nothing wrong with this, Now let's watch. Where's our stops going to be? Here. And what else is there? Liquidity was here. So we want to watch this area coming out and the IB. There's what at the IB? Potentially buy stops, shorts, and then either we're going to come all the way back and squeeze, or once we come above these swings, if we get selling and absorption, and here's liquidity, and we come to what's called an outside edge, we can do this. So let's just see what it does. And this would be called mean reversion. Underline the term mean. This sets up another short if it's in your plan. Now, let me explain what you're looking at. What the market tends to do is these rotations that you see, they're auctions. What's too high? What's too low? What's fair? Right there, that node. If it becomes too high, they leave it. They go, oh, I'm not shopping here anymore. Often what happens is the market will come back and check these prices. It's like shop. That's why I say this is like shopping. And if a price is too high, sellers are going to go, really? You're willing to pay this? Here, have some more. And then the buyers get absorbed by the sellers, and here's this liquidity, and potentially can rotate down. So when we come outside, and especially because of this location, if I come out, pick off some stops, and I see the absorption, and I get a trigger, I can take this trade short again for a rotation. That's how it starts. Outside edge. Now this is VPOC migration. This is saying at the moment everything above us is too high. Remember, we're outside of range, outside of value. All there is so far that is aligned with the current trend is shorts. So shorts, it's kind of, when I think about, short, long, what, it's kind of like, where do you have edge? You need to know that all markets are not created equal. All conditions are different and they change. So we're always going to be in a condition that is potentially either continuing or changing, subject to time frame. So if the developing time frame is shorts only, counter trend trades, which can work and will work, do not have an equal edge. Again, what's the trend in your time frame? If you're a scalper, and I'm hoping you're not, then you might be finding a different time frame to operate in. You might go, this is great, see the absorption, just go there. That's a reversion trade. But if the trend is down, you may only want to be taking short outside trades, reversion, back in the continuation towards the direction of the market towards this 42. Up to you, not me, your plan. And here's the other thrill. There's nothing predictive, so you have to also have a trade management plan. So these are either you're taking continuation shorts, you're managing your trade, longs. Again, these aren't recommendations, but you should know whether or not you have an edge in counter trend trading. What I always suggest to developing traders is learn trade management. Counter trend triggers subject to your time frame, can be trade management opportunities, not reversals. You need to know if you're with the dominant side that you can manage that trade and you have a trade management process to extract the edge over a large sample size. In fact, we always talk about this in Trader Lab is edge. Is that making some sense? No, I don't scalp. I trade rotations. Now, scalping, I guess, is in the eyes of the beholder. But if you're a swing trader, you still have to enter in a short time frame. Now, I don't do scalping at all. To me, that's a license to lose dollars and go out of business. The dollars are made in the swings and the rotations. They're not made in any of this. But to get into the trade, you've got to get down into a micro structure so you can manage and compress the risk as much as possible while trading to larger targets. Does that make sense? So Ragnar, yeah, I mean, if you're a swing trader, then yeah, I guess you might call this because it's shorter rotations. But no, it's statistical probabilities. So, but because we don't know what the market's going to do, I mean, this is part of the thrill of randomness. What we have to be able to do is already know where the trades might show up. And that's in a developing daily time frame. The microstructure are triggers. So what I'm doing is I'm going down in time frame, but it's all in alignment with higher time frames. So think of them like Matryoshka dolls. I always think of them like those Russian dolls. They're inside each other. So it's a vertical integration of time. And most of you guys think of, 60-minute, 15, 5, daily, weekly, monthly. That's all time-based. In here, there's no time. In here, it is what does it take for the auction, these participants right here, to come to a conclusion based on volume. So consolidations are auctions, and they happen in different time frames. So you may see a consolidation on a 60-minute chart. I can see a consolidation right here. They're the same structurally, but different time frame. So if I have everything else lined up, I'm going to go down to as short a time frame as I can for triggers. But the trigger has to be in alignment with everything else. Does that make sense? Do we get the 42? I have no idea. 42 is the target. Oh yeah, we got there. So this is the target, guys. So, and you saw all this on the chart before we ever got there. Now, again, guess what? It probably looks like, oh, you know what's going to happen. Let's get real here. Nobody knows what's going to happen. What I do know is how the market works. You do too if you go to supermarket. What is a supermarket? They call it a market. And what you're doing is you're exchanging your currency for a product. If a price gets too high in the store, you're not going to pay it. So the sellers are going to be lowering the price. And who are the sellers, by the way? We have the passive side, and we also have the sell stop. So we have built-in sellers. Now, the next thing we're going to have in built-in buyers. Who are they? The shorts that are in here. Now, what we don't know, because it's FOMC, and remember, for the last week and even Friday, if you review Friday's stream, it's all about where are the sellers. They're all here. You're going to say, well, wait a minute. The buyers are here, right? But what's under the longs? The sellers, the sell stops, the sell stops. If I come out and take the shorts out, which was what's above here, and now the shorts in here are hasta la vista, they get a coupon to the buffet. What happens to the longs? The same thing that happened to these shorts. They get, as they say, filleted, because that's market mechanics. You need to be thinking like a retail trader, but not acting like one. You really need to think from both sides. Do you want to join the longs when they have not been, when all these sell stops are under here? Not me. Now, intraday, we can trade long, short, doesn't matter. But overall, this is, to me, low-hanging fruit to go there. Now, that doesn't mean we're done. But for the short, for me, this is the target. And it's all for the same reason. What is this? This is what's called a micro composite, and this is the high volume, the retail price, or highest volume from this high to this low. And this was a little gap, if you remember. It is possible that we come all the way down here. Not today, maybe never. It is possible. And this may happen on FOMC or never happen. Not important. Does that make sense? So this is structured trading, guys. There's no holy grail. Wish there was. No ATM in the basement. All you get in this business is maybe and understanding market mechanics, not predicting anything. I certainly can't predict anything. What I can do is understand really, and what I have done is figure out how the market works. I can't predict what it'll do because it's random, but I can anticipate behavior, and then when I see it, I can do something. Now, what do we do with this? So, this is a sweep. This suggests, again, location, counter rotation. It's not a long, unless you trade counter rotation. If you are trading counter rotation, this could be a long to there. It's not a trade recommendation. This is counter trend. There's another piece to this. Suppose you're still short. Now, we already know this is a target, but let's say you get the sweep. Do you just exit? Me? Yes. Well, I trade with targets, so it'd just be limit order sitting a little above here, and that's it. Go back in the Barca lounger, if that's my plan, and take a nap. It's warm here in Costa Rica. The other part of it is, if I'm a counter trend trader, this is not a trade recommendation. Remember what my comments are about counter trend trading. It's not the same. You might only get counter rotation, right? Like this, and then be caught, as they say, on the short end of the stick. So if you want to trade in alignment with the current trend, you wouldn't take a long. If you are a counter trend trader, you might, because this is a intermediate time frame level, you might take a long to come back there. And I'm saying you might, and why? Because in the intermediate time frame, this is a former, or I should say a current retail price. In other words, fair. But if it gets too low and I have a sweep, I might come back across the range and squeeze the buy stops out that are here and come back there. That's a maybe. Let's hang out together and watch maybe. Maybe it'll do this, maybe it'll do that, maybe it won't do anything. The thing that we're most uncomfortable with in trading is maybe. Maybe, because that creates fear and uncertainty. The primal wiring suggests be sure. Be sure there's no saber-tooth tiger behind the rock. Well, once you become sure, the trade has already gone. Then it's FOMO. Oh, I got to chase this thing because now I'm sure. One of the things that I've always thought about when I talk to a lot of traders, of course, and over the years, coached a lot of traders, done a lot of work with traders. And what is certain? Here's the question. What is certain? Is uncertainty become certain ever? Or when we have FOMO, or we're looking for confirmation, which means looking for certainty, and I have more risk, what am I getting? I'm getting more risk. I'm not getting more certainty. But our primal wiring says avoid risk, look for certainty. So if I respond to certainty, where am I getting long? Would it be here or here? And my stop would be under here? Or if I understand market mechanics, and again, this is not a trade, this is just a concept. If this is where, as a counter trend trader, I might get long, don't I want to get long as close as I can so I can potentially get risk neutral? Because I'm just as uncertain of the outcome there as I am there. Does that make sense? So don't complicate it, guys. You know, our nature is to look for certainty and add more, 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 more. Well, that's the same thing you're doing with your indicators. You're just doing the same thing. The simpler you make it, the less conflict you're going to have, and the ability to make a very simple process that you can see coming. It's kind of like you see it coming, you anticipate it. The more you put into the mix, the more potential conflict. This is not a business of complexity. We make it complex because we're trying to extract certainty. It's human nature. Think about how many indicators you tried to thread together to create certainty. How is that working for you? It's the same concept. Doesn't matter what you do. You know, Fibonacci, Gann, Elliott waves. I've been there, done all that. Harmonics, Fibonacci harmonics. I mean, just go on and on and on. You know, time-based harmonics, fractal harmonics. I can't remember anymore because I don't need to. But I spent years with a lot of different things, and they all worked. But over time, they didn't have edge. So what I did was I actually worked against myself because of the random winnings, and it all looked good. And then you go back and get your screwdriver out, make it a little better. And then after doing that manually for a long time, I built systems that did the same thing. And I still came out with the same outcomes with these things. So I no longer do any of that, and which was very hard because when you see random winnings, you think it's make it better. You know, we like it. There's comfort. It's red light, green light. You know, we try to define things. I understand. You do too. But if you're still doing it and you're not getting a different outcome, you have to look at what you're doing. We all try to find certainty because we're wired to avoid the risk, right? But what happens if you go into a business where there is no certainty? You can't make it what it isn't, you know? Does that make sense? How are we doing in YouTube? Are you guys conscious? Please give a like if you're visiting. Remember, Trader Lab's available to all of you at no cost. There's a link in the bottom of YouTube, and there's a lot of additional education in the Bookmap server as well as Trader Lab. You can learn about large cap, small cap stocks, order flow with a high tier tool like Bookmap, options, market maker behavior, algorithmic behavior, of course, order flow, and a lot more. Volume profile like this, and a lot of other approaches. There's not one way to trade, but I'm going to suggest our nature is to pile on everything, but that is really part of the problem for sustainability, because if you have too many random inputs, you don't even know. Remember how casinos play games? That's a proven business model, and they use anchored inputs. They don't use variables. They're in a random environment. So are we. So if we're in a random environment, let's look to a successful business model, and that is only playing games that have edge. Now, what that means is you got to extract edge. You got to know what an edge is. You have to know how to determine what it is. You could do that in Trader Lab. And getting edge is the work part of this. And you don't need a lot of trades. We all think, oh, I want to be busy. I want to be getting the dopamine. This is not a business of dopamine. It is actually dopamine is a component that will basically get you hooked on pushing the mouse and playing the game. Professional traders don't operate that way. Professional traders are looking for edge, and that doesn't mean a lot of trades. It means when you have an opportunity and you understand who's trapped, you may have the opportunity then to capitalize on a large rotation. That's how I trade. I'm not saying it's the best way to do it, but I look at the large rotation. It pays for the stops I take. You take stops, I take stops overhead, but I get paid, and the stops get covered by waiting for the better opportunities. So we had shorts up top. We had a continuation trade here to there. That's all structured trading. If you're a counter trend trader, and this is not a recommendation, you could have a long here. You have to get risk neutral. Your sellers are in control here. See where they dropped it? This is where the buyers were. Look across. So you got resistance here. Sellers to control here. You got buy stops here. You got stops here. If we come across, we're going to start squeezing, and that can bring you up here. Counter trend. Are you a counter trend trader? So I don't, at least for this stream. Now, the thing is, before you can be looking at this as longs, you should be looking at as trade management. So either trade to targets, which is what I do. I just put the trade out and manage a trade. I put the limit out. If I get taken out on a counter rotation, and all it is a counter rotation, I'm then going to look and see, do I have a place to put it on again, as long as it hasn't, the structure of the trade or the context hasn't been violated. And that's trade plan specific. This is a counter trend long, right? Not a trade recommendation. But to understand why it's a counter trend long, it's the same reason to understand why we had shorts today. What does the market do in all time frames? What does it do? What does it do? Where's the paper, or the stops, I should say? We used to call it paper when we had guys on the floor. Buy stops are here. Why does the market go there? Well, because there's buyers. If I get buyers above these stops, I need more buyers to continue. If I don't get the next layer of stops, which is there, what does that tell me? I ran out of buyers. And if I can't reach into an area, it's telling me maybe this is too high. Then, because of that low volume node at 94, and the high in the ETH is 94, which is where we rejected this up here, which I already showed you. If you haven't seen it, top of the stream, review the stream. Then that sets up coming back here, taking the sell stops from the buyers in here, getting down here maybe, and the stops underneath. But what is the fair price in the intermediate time frame? Here. So look at the logic of multiple time frames. What I am doing is the same thing in all time frames. This is the retail price from Friday. Well, it's too high. This is the current developing retail price. Who knows about that? But this is the retail price for all of this. If this is too low, I can come back and check if this is now too high. If it's too high, I may bounce off it, come back here, or come. I mean, what it's going to do is not my job. If I'm a counter trend trader, I might get a rotation here or not. I do treat counter trend trades differently than I do aligned trades. Where's our sellers? Let's come back. There they are. Here, there they are, and out here. So if you're counter trend trading, this is where you're trying to go. But as again, remember the term, counter trend. You're on the weak side. What you don't know is, are we going to take this out? And of course you can. So if you counter trend, and there's more stops under here and another target down here. Let me show you where this is coming from, just so you know. So I know where it might go. I don't know where, if. So the job is not what it will do, it's what it might do. So this is the retail price. There's sell stops under here. If I dip below here, I'm going to get these guys out in here. Might not, don't know, don't care. So this is possible. This is the main target. Does that make sense? How are we doing in the Bookmap Discord Trader Lab? You guys doing okay? Is this making some sense? How you doing in YouTube? Post a question if you have it. Please hit the like. Encourages me to keep doing this. There's no cost for Trader Lab. It's open to everybody. You don't have to be a Bookmap subscriber now, ever, never. And it's really about Bookmap's investing in your success. If you're successful, Bookmap is successful. Speaking of that, I want to share something with you. There's a Black Friday opportunity going on here. You guys like sales, right? 50% off Global Plus quarterly. If you want to just take it for a test drive monthly, 60% off, and you can get data, try it out, get your toe in the proverbial water, and 50% off add-ons. And as many as you want, or, there's all different add-ons, and go to bookmap.com and you can see all the packages that are out there. Check it out. If you've ever thought about it, this is a great way to do it. I always say, I wish they had a sale when I started. I think it was 2015. Really don't remember. Is this making some sense, everybody? Can you kind of see that trading doesn't have to be complicated? It's already random. So if we make it complicated, how does that help us? Does it change the risk parameter? Does it give us what? More certainty? Or does it just give us more conflict, more ambiguity? I found for me that years back, and I started in 1980, so I've got some time, that indicators were new, Wells Wilder. So it was pretty exciting. I shared an office with George Lane. He created stochastics. He had an Apple I that he did that on. I had an Apple IIe, so I had high tech, and that's how we started out, And oscillators, I thought, were the holy grail. Look at that, the line crossed, So it's kind of where I started. And then along the way, all this Wells Wilder stuff, ADX, DMI, parabolic, all the stuff you've probably looked at, RSI, unbalanced volume. We didn't have volume. We didn't have candles. Nobody found those yet. So it was all bars, open, high, low, close. So I'm just saying, as I started back then. So I spent years digging into all these indicators, trying to understand them and then modifying them and, applying them in different situations. So I spent a lot of years with that. And I always came back to the same thing, and that is trying to fix it, trying to make it better. Gee, I have winning trades with this. What do I have to do? And then, it's this mix. And the thing I didn't really understand back then, because all my friends were floor traders, nobody was talking about it, was that this is statistical business. Now, when we look at statistics, we're looking at P&L. We could be looking at win rates and stuff. But we're taking them quite often. We look at it as kind of in the global, all put together. We don't pull it apart and look at what's the condition of the market, what trades qualify. How do you qualify the market? Is it the range? What is the range? How does that impact you? Where is it relative to the previous days? Are we inside of the range and we're just oscillating and balancing on both sides and rotational? Or are we directional? Aren't they different conditions? So one size does not fit all. You can't take a generic application and think it's going to work all over the place. Now, why would this be a potential long for a counter trend trade? Remember? And it's not because I know what the market will do. Here's what I do know. Absolutely. I know what it might do. That's all I have is maybe. That's why this, in a higher time frame, was a target coming down, and in a shorter time frame, counter trend, right? Potentially out here. Why would it do that? Here's the thing. Why? If you were in Trader Lab, you would understand why. And I think it's important to know why, not if, because we don't know if it'll do it. We do need to know why it might do it. And if we have a plan that accommodates counter trend after testing a key level, and then in the developing daily time frame, this is the high volume or shopping experience, retail price, and there's stops here I have fuel. So what's the fuel? The sellers now become buyers. Does that make sense? How are we doing in YouTube? Please give a like. I hope this is making sense. So for me, this is a long counter trend. If you don't have a counter trend plan, it's an exit. Or you're trading the targets. It's an exit, right? Steph, are you asking me that question? Um, Steph, if you're asking me that question, for me, it was shorts today based on ETH. Because the way I look at this is Friday's RTH was the last auction. That's what you got. We had that LVN at 94, which this is Friday, so this is where this was located. If you look at the profile, this is where the outside edge was. Low volume node. The ETH high came up here. What this is saying in the language of the market is this whole thing up here was too high. So this is the high Friday, and then we fell out and we closed all the way down here. There's the high volume or retail price. Well, ETH high is here. So then the next auction, Sunday night, and this is too high, and we tested it twice, then if I reject it, then I can be looking to get short. Now, traders can get long. They can do whatever they want to do. I know that this is too high. Now I have to be looking in somewhere for shorts. That doesn't mean I can't take a long, but when I open in range, in value, which is, and this is all at the top of the stream if you missed it, then I'm waiting to see who takes control. And based on what I knew, and again, it doesn't mean anything other than what might happen, I'm ready to get short. I don't know where, I don't know if, and of course, I don't know if I'm going to take a stop and be totally upside down. And if I am totally upside down, which is always possible, then I'll take a stop and maybe I'll turn around. I mean, that's kind of it. So that part I don't know, and nobody does. So it's just really understanding. For me, the basic understanding is how the market works. The market works in all time frames. It goes up to go down and goes down to go up. And the reason it does it is we have buyers and sellers in every leg. So if the market goes up, let me just see here, I'll show you here. I mean, it's very simple. I mean, the market goes up to go down, goes down to go up. Where are the stops? There and there. Where are the stops here? Under there. Where are the stops? They're under here. Then what? Market goes up, takes these stops, doesn't take them, takes these stops, comes down, get the shorts in, then we get a tail and the buyers squeeze out the shorts. Take that one. You see, it's always rotating, and it does this in all time frames as you think of time. And so, and the reason is, in each rotation in all time frames, there's always trades on the other side. So there's stops. So the shorts, the market goes up to go down. What are we doing now? We went down to go up. Why? Buy stops, buy stops, buy stops, buy stops, sell stops, micro high volume structure, break high. Where were my buyers? There's my absorption. There's my sweep. There's my absorption. This is the other part. Think real estate. Location. That's why this is a counter trend long, and we're trying to go there. This is a higher time frame version of that. This is the high volume in the developing daily time frame. This is basically what the shoppers are saying. When you go to the store, there's a retail price and everybody's willing to do business. If it goes on sale and the price gets too low, then the sellers are not going to sell it to you anymore. And then the sellers are going to start pulling or getting eaten up by the buyers. And we can come back to the current retail price in the developing time frame. Higher time frame, maybe too low, no clue. Developing time frame, maybe fair. So the nature is, if that's too low, let's check this. If this is too high, then we can fiddle around. If we fall out the bottom, there's more stops down here. We might, or we could be done. If you're going to ask me, what is it going to do? I'm going to say, I have no idea. My idea is I understand market mechanics, and I know that when the market gets short, see, the reason the market went down today, maybe, is because the market went up. And if the market goes up, the market goes down. And if the market goes down, the market can go up. Because what do we have in the market now? All these shorts have buy stops. What's in this leg? Buy stops. What's down here? Buy stops. And what takes the market up? Short covering, buyers, and buy stops. That's why, if you understand market mechanics and you understand trading in the direction of the dominant side, you can learn to trade the opposite side counter trend. Does that make sense, guys? Hope you're getting something out of this. This is Trader Lab. And the idea of Trader Lab is to help you build out the business. There's no holy grail, there's no secret sauce, and there is no shortcut. But you can learn in Trader Lab, and it's a group of like-minded traders who've come together to leverage their collective experience. It is not right, wrong. It is not a video game. It's business. If you're interested in the business of trading, by all means, use the link in the bottom of YouTube and visit Trader Lab and all the other education that's available to you in the Bookmap server at no cost. So here to here, and then we have what? VWAP and mid. So you could be done, or you would have taken this long if it's in your plan. What do you think of this? Do you think you can learn this? By the way, I don't use indicators. Let me explain what I'm doing. I'm reading language. Have you guys ever tried to learn a foreign language or play a musical instrument? Think about it. In order, or even drive in a car, you have to become unconsciously competent. If you're going to be in a sports environment, let's say you're going to play a game, you have to become competent. You don't start out competent. You actually start out incompetent. This is a business of competency and reading language. Now, indicators are translators. So if you think about what an indicator is, it's attempting to, you're attempting to use some external process to define condition. And since all this stuff is murky and conditions are what time frame based and all this, we have all these different indicators, all these different time frames, and all this conflict and ambiguity. I don't know how you make decisions in that. So if you understand how the market works, I believe you don't need your indicators. You want to develop the confidence in really reading the participant behavior, anticipating it. Now here we get mechanical sellers. We have the mid. What else do we know? We're inside this range. We're outside of this low volume node. And we are, for me, I'd be in the Barca Lounger. I have no trades here. Not a recommendation. But mechanically, traders sell VWAP to VPOC. It's a structured trade in Trader Lab. It's not a trade, and it's not a recommendation that I would necessarily get involved in because there's shorts in the market and there's stops at the mid. So me, Barca Lounger, not a recommendation. Hope you're getting something out of this. Please leave a like. Don't forget that Bookmap is having a Black Friday sale. It runs through December 31st. You can save a substantial amount of dollars. Even if you want to try this on a monthly basis, just get your feet wet and see what this is all about. It is available. So be sure to check that out. Go to bookmap.com. Please leave a like if you're visiting in YouTube. Also, there's a library of webinars in there and a document section, and the Trader Lab community is available to all of you at no cost. Have a great day. Thanks for visiting Trader Lab. Please review this stream and the library of webinars in the Trader Lab. Say hi and visit the Trader Lab community. Take care, guys. Have a super day. Look forward to seeing you tomorrow.